Did you know that Tesla CEO Elon Musk recently gave a huge warning to Tesla stock investors about Q2? Is this a good thing or something to be concerned about? Make sure to stay tuned to find out what the warning is about. Tesla has been the leading EV manufacturer for a long time. Stockholders, investors, and analysts alike have been keeping an eye on the company. Due to the recent events across the globe which have subsequently affected the economy, stock prices in the stock market had been experiencing a downward trend, including Tesla and other large corporations. In today's video, you will find out about the huge warning Elon Musk just gave to Tesla stock investors about Q2. Tesla is an American automotive and clean energy company that designs, develops, manufactures, leases, and sells electric vehicles and energy generation and storage systems in the United States and other parts of the world. With futuristic and eco-friendly goals, Tesla became a name known all over the globe. In fact, Tesla is the leading automaker in the electric vehicle market. Despite the supply chain issues brought about by COVID-19 lockdowns, Tesla was able to deliver 310,048 cars in the first 3 months of the year, which is a quarterly record that came in above analysts' forecasts, as supply chain challenges were offset by accelerating EV adoption. For this reason, among others, Tesla stock investors remained bullish. While other companies have been struggling with chip shortages and supply chain bottlenecks and scrambling to find an alternative solution, Tesla pivoted between suppliers by rewriting its software just so the factories and plants won't stop running. Moreover, Tesla has opened 2 new manufacturing facilities in Austin and Berlin. These new plants aim to increase production along with the Shanghai and Fremont factories. Tesla CEO Elon Musk is known to often send company-wide emails near a quarter's end to push staff to sprint to the finish, and Tesla is known to deliver many units in the final weeks. In a subsequent memo, he told workers to be proud of the great, real products they make. In the first email, Musk told the employees, "We actually build great, real products that people love and make their lives and the world better." That is so profound. It is an honest day's work that you can feel in your heart. Whatever else is going on in this messed up world, know that at least what you are doing is pure goodness, and that I have infinitely more respect and admiration for you than the richest person on Wall Street. However, the emails of praise and encouragement are in stark contrast with the next message the world's richest man sent earlier this morning, warning of layoffs among salaried employees and his super bad feeling about the economy. Furthermore, Musk asked Tesla employees to step up their efforts after supply chain issues resulted in a very tough quarter for the company, according to a leaked email to staffers. Aside from, or perhaps because of, the COVID-19 pandemic and the Russian-Ukraine war, which have greatly affected the world's economy, Musk and other financial experts are predicting a global recession. So as Elon Musk already said, today investors face a dilemma. Inflation is at its highest point in 40 years. The Fed is going through a phase of aggressive monetary tightening, and top firms predict stock market returns under 5% until 2035. Restructuring your portfolio has never been more difficult or more crucial. So where can you turn? Well, a recent JP Morgan report declared alternative assets are no longer optional. In light of this new normal, certain platforms have arisen giving access to the top alternative asset classes. And there's one that particularly impresses me. It's called Masterworks. Masterworks has solidified itself as the platform for investing in contemporary art. They let you access their exclusive investments from names like Banksy, Monet, and other iconic artists for just a fraction of what billionaires pay to purchase. Because roughly 2/3 of billionaires allocate between 10 and 30% of their overall portfolio to art, in part to diversify and because it's a natural inflation hedge, it makes sense, after all, contemporary art prices outpaced the S&P 500 total return by 164% from 1995 to 2021 and have exhibited the lowest correlation to equities of nearly any major asset class. Since its inception, Masterworks has sold 3 paintings, with each returning over 30% net of fees to investors. Of course, past performance is no guarantee of future results, but 30% is quite impressive. You can actually skip Masterworks' waitlist. Go to the link in the description. Going back to the aforementioned leaked message from Musk to his employees, Musk said, "This has been a very tough quarter, primarily due to supply chain and production challenges in China, so we need to rally hard to recover." Musk added that Tesla's Shanghai factory is returning to full strength, and its factory in Austin, Texas is spooling up. He also noted that the plant in Fremont, California achieved a new all-time production day last week, while the factory near Berlin produced nearly 1,000 cars. Before we continue with the video, make sure to hit the like and subscribe button to watch more of our Tesla stock content. The COVID-19 lockdowns due to zero-COVID policy enforced in China added to existing supply chain difficulties for Tesla, which, like other companies, has struggled to obtain necessary parts and materials in recent months. The Shanghai factory resumed production in mid-April after a 3-week pause that caused Tesla to produce more than 50,000 fewer vehicles than expected at the plant. According to several reports, employees at the facility temporarily worked within a closed-loop system that required them to sleep on the factory floor. In May, Musk told the Financial Times that he did not expect long-term difficulties related to COVID-19 lockdowns. He said, "I've had some conversations with the Chinese government in recent days, and it's clear that the lockdowns are being lifted rapidly, so I would not expect this to be a significant issue in the coming weeks." The lockdowns were just one source of pressure on Tesla's operations this quarter. Musk's long-delayed effort to buy Twitter has also weighed on Tesla shares, which plunged in recent days as he sold some of his stake in electric car maker to fund his $44 billion takeover bid. Musk recently warned Tesla employees that he had a super bad feeling about the state of the U.S. economy and said the company would pause all hiring worldwide. Musk also indicated that Tesla could lay off about 10% of its salaried workforce. It can be noted that earlier this month, Elon Musk told Tesla employees to expect a nutty end-of-quarter delivery wave this quarter during the new company-wide meeting. In the said meeting, an employee asked Musk about when delivery cycles will level off to avoid the insane end-of-quarter delivery push. Musk answered, "This has been a challenge since late 2008. There always seems to be something that happens and causes the end of the quarter to be nutty, and this quarter will not be an exception, mostly because we had this huge challenge with the COVID restrictions in Shanghai. It basically shut down the Shanghai factory for much of the early part of the quarter. It is only now getting back to full production. It will be pretty intense this quarter." Tesla's CEO tried to reassure the employees, saying that unless something happens, Tesla should have a much smaller wave next quarter, and it should get gradually better as Gigafactory Berlin ramps up production and frees up capacity from Gigafactory Shanghai, which is currently exporting a lot of vehicles to Europe. Adam Jonas shared his thoughts on Elon Musk's warning of a tough quarter. Adam Jonas is a Morgan Stanley analyst who has an overweight rating and a $1,300 price target for Tesla shares. According to him, given the high dependence of Tesla on China for production and profitability, the impact of COVID-19 lockdowns in Shanghai is real. Tesla has demonstrated that it can make up substantial lost ground by accelerating deliveries into the close of the quarter. He continued to explain that disproportionate amounts of a full quarter's production can occur in the final week or two. Jonas added to say that lost production and deliveries in the second quarter could provide pent-up sequential tailwinds for the third quarter results. Cathie Wood, another Tesla bull and established investor, made a video recently where she stated that the Fed's move to raise interest rates by 50% was wrong. Additionally, she mentioned that the U.S. can potentially go into recession since Europe and China are currently in recession. Because of this, she deemed that the move to raise interest rates is wrong, as it is not the right time because there is a lot of pressure on the global economy and within the U.S. Cathie Wood, an American investor, a star stock picker, and the founder, CEO, and CIO of ARK Invest, a company with $60 billion in assets that invests in innovations like self-driving cars and genomics. That said, people all over the globe, along with investors and businessmen, should exercise caution in every move. Of course, even without the threat of a global recession, one should be cautious as to where they put their hard-earned money too. Enough knowledge of the global market, as well as thorough observation of the stock market, should be exercised. If you enjoyed this video, head on to our channel and watch our other videos.